Friends, thank you for being here today. What if I told you that while your government has been celebrating a soft landing, the productive backbone of this country has been quietly snapping in half? What if the recession everyone keeps warning you about isn't coming at all because it's already been here for 12 months, hidden in plain sight behind immigration statistics and manipulated GDP numbers? I want you to consider something that defies everything you've been told about our economic recovery. In 2024, Canadian business insolvencies reached their highest volume since 2010, not since the pandemic, not since 2015, since 2010, the darkest year following the global financial crisis. We have officially breached the crisis ceiling, and almost nobody is talking about it. Let me give you a number so staggering that it creates what I call cognitive overwhelm. Transportation and warehousing insolvencies, the people who move every single good you consume, surged 58.6% in a single year. Construction insolvencies, the people who build the homes we desperately need, jumped 30.1%. Overall business failures climbed 28.6% year over year. These are not minor corrections. These are not adjustments. This is a mathematical reality that proves the economy isn't growing. It's collapsing from the inside out while the government pumps in enough immigration to mask the body count. This is not a prediction. This is not fear mongering. This is a structural fault line that has already begun to fracture. And what I'm about to show you is why the next 12 months will reveal an economic landscape that most Canadians are psychologically unprepared to navigate. Now, here's what makes this moment so dangerous. The media is still using the language of optimism. They talk about resilience, they talk about recovery, they use words like soft landing, as if we're gently touching down on a runway, when in reality, we've already crashed into the mountainside. We just haven't counted the bodies yet. The wreckage is buried in government PDF files that nobody reads, hidden on page 10 of reports released on Friday afternoons, obscured behind the distraction of record population growth. But let me take you back to where this story really begins, because what's happening right now isn't an accident. It's the final act of a tragedy that was set in motion years ago. In 2020, when the world locked down, the Canadian government did what every government does in a crisis. It opened the vault. They created something called CEBA, the Canada Emergency Business Account. On the surface, it looked like a lifeline, $40,000 interest-free, partial forgiveness if you paid it back by a certain deadline. Business owners across the country, the builders, the truckers, the restaurant owners, the manufacturers, they took the money because they had no choice. Revenue had vanished overnight. Payroll still needed to be met. Rent still needed to be paid. Think of it like this. Imagine you're drowning and someone throws you a rope. You grab it because that's what drowning people do. But what you don't realize until you're already holding on is that the rope is attached to an anchor. That's CEBA. It wasn't a rescue. It was a delayed execution. Here's the mechanism that most people don't understand. The government gave you that money with a deadline. Pay it back by December 2023, and they'd forgive a portion. Miss that deadline, and the loan converts into a high-interest obligation that most small businesses simply cannot service in an environment of elevated rates and collapsing margins. So what happened in 2024? The anchor dropped. Businesses that had been treading water for 3 years suddenly had their debt called in, and when they couldn't pay, they went under. This is what I call the CEBA time bomb, and it detonated in 2024. The spike you're seeing in the insolvency data isn't random. It's not organic market forces. It's the direct consequence of the government pulling the plug on the very businesses it claimed to save. They gave you a rope, waited 3 years, and then yanked it. But here's the secret that connects this to something much larger. something we need to understand about how modern economies truly function. This leads us to the system's most crucial secret, which we will explore in depth. The Canadian economy, like every Western economy, operates on a simple principle that nobody wants to say out loud. Debt is not designed to be repaid. Governments borrow, businesses borrow, consumers borrow, and as long as rates stay low and liquidity keeps flowing, the illusion holds. Everyone pretends the debt is manageable. Everyone pretends tomorrow will bring enough growth to service yesterday's promises. But what happens when the invisible force keeping that illusion intact, cheap money, suddenly vanishes? Let me take you further back to understand the architecture of what's collapsing. In the 1990s, Japan made a decision that would reshape global finance for the next 3 decades. Faced with a deflationary spiral after their asset bubble burst, they dropped interest rates to zero. Then they went below zero. They created what we now call the carry trade, a mechanism where investors could borrow yen at essentially no cost, then deploy that capital into higher yielding assets around the world. It became the scaffolding beneath every major market rally, every real estate boom, every risk on trade you've witnessed in your lifetime. Think of it as a massive invisible mortgage on the entire global economy. You borrow at 0%, invest at 5%, pocket the difference, repeat 1 trillion times. The leverage becomes staggering, the interconnections become unbreakable, and the entire structure depends on one single condition remaining true forever: that Japan never raises rates until they did. When Japan started normalizing policy, they didn't just pull one brick from the wall, they removed the linchpin. The carry trade began to unwind, liquidity started to evaporate, and suddenly businesses that looked healthy on paper, businesses that had been able to borrow cheaply, refinance constantly, and operate in an environment of abundant capital, they found themselves facing a reality where money has a price again. This is the context for what you're seeing in the insolvency data. This isn't just about CEBA loans. It's about the entire financial architecture of the post-2008 world starting to crumble. The foundation was always sand. The edifice was always temporary. And now the tide is going out. Now let me show you why this matters specifically to you right now, in the choices you're making about where to live, what to buy, how to prepare. Look at the sectors that are failing. Transportation up 58.6%. Construction up 30.1%. These are not speculative industries. These are not tech startups gambling on the next big thing. These are the canary sectors, the businesses that move physical goods and build physical structures. When truckers go bankrupt, it means goods aren't moving. When builders go bankrupt, it means houses aren't being built. This is the productive economy, the real economy, and it is being vaporized while the stock market hits new highs and the government celebrates GDP growth. How is that possible? How can the economy be growing while the businesses that actually produce value are failing at rates we haven't seen since the financial crisis? The answer is population growth. They are importing consumers faster than they are destroying producers. The GDP number goes up because you're dividing economic activity by more people spending money. But the per capita reality, the actual wealth per person, is collapsing. You're not richer. The country isn't stronger. The economy is just more crowded. This is the gaslight. This is the lie that allows the politicians to stand in front of cameras and say Canada is back, while construction firms that survived the pandemic are closing their doors in record numbers. And here's where it gets truly insidious. Let me show you the forensic evidence that proves this isn't just a statistical anomaly, this is systemic rot. Ontario and Quebec, the two economic engines of this country, saw the largest absolute increases in business failures, not the periphery, not the struggling provinces, the core. The heartland of Canadian manufacturing, construction, and logistics is hemorrhaging productive capacity at a rate that would be front page news in any other era. But we don't live in an era of honest reporting anymore. We live in an era of narrative management. Transportation insolvencies up 58.6%. Let me translate what that means in practical terms. Trucking companies are the circulatory system of the economy. They move food from farms to grocery stores. They move materials from ports to factories. They move finished goods from warehouses to retail locations. When trucking companies fail at this rate, it's not just a business story. It's a leading indicator that consumer spending has fallen off a cliff and the supply chain is beginning to seize up. You know what's remarkable about this number? During the pandemic, when the entire world shut down, when borders closed and lockdowns were enforced, transportation insolvencies didn't spike like this. The government backstopped everything. They printed money, they paused debts, they created the illusion of stability. But in 2024, with no lockdowns, with borders open, with the economy supposedly recovering, trucking companies are failing at rates that dwarf the pandemic years. What does that tell you? It tells you the damage is worse now than it was then. It tells you the artificial support has been removed, and the moment you remove the life support, the patient crashes. It tells you that the real economic crisis wasn't 2020, it's right now, and it's accelerating. Now let's talk about construction. We are told we're in a housing crisis. The government says we need to build millions of homes. Immigration is at record levels. Demand has never been higher. And yet, construction insolvencies are up 30.1%. Ask yourself this question. How can you have a housing crisis and a construction crisis at the same time? How can the need for homes be exploding while the companies that build homes are going bankrupt? The answer reveals something fundamental about what's broken. It's not that builders don't want to build. It's not that demand doesn't exist. It's that the mathematical equation of construction has become impossible. Material costs have skyrocketed. Labor costs have skyrocketed. Taxes, fees, regulatory compliance, all of it has compounded to the point where you cannot build affordable housing at a profit anymore. The numbers don't work. So what happens? The builders who try, who take on projects, who attempt to deliver what the market is screaming for, they go bankrupt. The ones who survive are the large corporate developers who build luxury condos for foreign capital and speculators. The productive middle, the small and medium-sized builders who used to construct the homes that working families could afford, they're being wiped out. This is the productive purge. The economy isn't selecting for efficiency. It's selecting for scale and speculation. It's rewarding those who can access cheap capital and play financial games, while punishing those who actually try to build something tangible. And this brings us to a paradox that I need you to understand, because it defines the trap we're all living in. For the builder, you can build and lose money because your costs exceed what buyers can pay. For the buyer, you can wait for affordable homes that will never be built because the capacity to build them is being destroyed right now. The housing crisis will not get better, it will get worse, not because of a lack of demand, not because of a lack of need, but because the system has made it financially suicidal to meet that demand. This is what I mean when I say the economy is purging its most vital organs. The businesses that move goods and build infrastructure, the actual productive economy, are being sacrificed while the financial economy, the speculative economy, the economy of rent-seeking and asset inflation continues to thrive. Let me give you another piece of forensic evidence that the media will never connect for you. In late 2024 and early 2025, As these insolvency numbers were being compiled by the Office of the Superintendent of Bankruptcy, something else was happening in the background. Inflation data was coming down. The Bank of Canada was celebrating. Economists were talking about how the worst was over. But here's what they're not telling you: inflation is down because demand is dead. Businesses aren't raising prices anymore. They're slashing them. They're liquidating inventory. They're trying to generate cash flow before they close their doors permanently. This isn't healthy disinflation. This is distressed deflation. Prices fall not because the economy is stabilizing, but because businesses are dying and dumping their goods at fire sale prices to avoid total loss. You know what usually comes after distressed deflation? Depression, not recession. Depression. The kind where productive capacity is permanently destroyed, where unemployment doesn't just tick up but explodes, where the economy doesn't bounce back because the infrastructure to bounce back has been dismantled. This is the 2010 ceiling I keep referencing, and let me be very clear about why that comparison matters. In 2010, the world had just experienced the greatest financial crisis since the Great Depression. Banks had failed. Governments had bailed out entire industries. Unemployment was at generational highs, and business insolvencies reflected that reality. They were front page news. Everybody knew the economy was in crisis. But here's the trap we're in now. The 2024 insolvency numbers have broken through that 2010 ceiling, and almost nobody knows. Why? Because the narrative has been managed, because GDP looks fine on paper thanks to population growth, because the stock market is propped up by central bank liquidity and corporate buybacks, because the government has learned how to hide a depression behind statistical manipulation and mass immigration. This is the silent depression, the crisis that doesn't announce itself. The collapse that happens in slow motion while the media tells you everything is fine. Now, I need to shift gears and talk about something psychological, because the greatest threat you face isn't the economic data. It's your own mind's refusal to accept what the data is telling you. Human beings are hardwired to believe tomorrow will look like yesterday. This is called normalcy bias, and it's the reason people don't evacuate before the hurricane, don't sell before the crash, don't prepare before the shortages. Your brain is designed to smooth out anomalies, to assume that systems are stable, to trust that authorities know what they're doing. But what happens when the anomaly is the new normal? What happens when the system is fundamentally broken? What happens when the authorities are either lying or incompetent? You have to override your normalcy bias. You have to look at the data and accept what it's showing you, even if it contradicts everything you've been told by people in suits speaking from podiums. Let me put this in stark terms. The people who move your goods are going bankrupt at a 58% higher rate than last year. The people who build your homes are failing at a 30% higher rate. The businesses that survived a pandemic, that weathered lockdowns, that endured supply chain chaos, they're closing now in the recovery at rates that exceed the worst year of the financial crisis. If that doesn't alarm you, if that doesn't make you question the narrative you're being fed, then you're not paying attention. And the cost of not paying attention is that you will be caught completely unprepared when the supply chain disruptions hit, when the construction industry's collapse translates into permanent housing shortages, when the transportation failures create empty shelves and rising prices for basic goods. This isn't fear-mongering. This is pattern recognition. This is reading the map while everyone else is staring at the GPS that's telling them to drive off a cliff. Now, let me show you how all of this connects into a convergence that makes the next 12 months unlike anything we've experienced in our lifetimes. We are facing three distinct forces hitting simultaneously, and the compounding effect is what creates the catastrophe. First, The CEBA time bomb, the government calling in its debts and forcing businesses that survived the pandemic into insolvency. Second, the interest rate regime, the end of free money and the return of real borrowing costs that most businesses cannot sustain with their current margins. Third, the regulatory suffocation, the taxes, the compliance costs, the environmental mandates, the labor restrictions that make it mathematically impossible to operate profitably in the productive sectors. These three forces are not separate problems. They are a trifecta, they feed on each other, they amplify each other, and they are converging right now. The CEBA loans mature and businesses need to refinance, but rates are high, so they cut costs, which means laying off workers or shutting down entirely. That creates unemployment, which reduces consumer spending, which means less revenue for other businesses, which creates more insolvencies. Meanwhile, the regulatory burden keeps increasing: carbon taxes, payroll taxes, zoning restrictions, environmental assessments. All of it compounds the pressure until the system snaps. This is not a cycle that corrects itself. This is a doom loop. And the government's response: more immigration to juice the GDP numbers, more spending to create the illusion of stimulus, more debt to kick the can down the road. They are not solving the problem. They are making it exponentially worse. And here's what you need to understand about the timing. When you look at insolvency data, you're looking backwards. These numbers reflect businesses that failed in 2024. But the decisions that kill a business happen months before the official closure. The revenue collapse happens in the second quarter. The desperate cost cutting happens in the third quarter. The final bankruptcy filing happens in quarter four or quarter one of the following year. What that means is this: the businesses that are failing right now in early 2025 made the decision to close in mid to late 2024. But the businesses that are struggling right now, that are cutting staff right now, that are burning through their last reserves right now, they're going to show up in the 2025 data. And if the current trajectory holds, if nothing fundamentally changes, we are going to see insolvency numbers in 2025 that make 2024 look tame by comparison. This is the mathematical endgame I keep referencing. Not a prediction, not a guess. A structural inevitability based on the forces already in motion. Now, let me address the lie that most people are still believing, because this is the final psychological barrier you need to break through. Stop looking at national GDP. That number is a mirage. When the government tells you the economy grew by 2%, they're measuring the total size of the economic pie. But if the population grew by 3%, then the actual amount of pie per person shrunk. You are poorer, but the number looks good. This is the per capita lie, and it's the most insidious form of statistical manipulation because it hides a depression inside the illusion of growth. Canada's GDP per capita has been falling for years. Real wages, adjusted for inflation, have been falling. Housing affordability has collapsed. Food costs have exploded, but the government can stand in front of the cameras and say the economy is growing because they imported enough people to make the aggregate number tick up. Do not fall for this. Your economic reality is not measured by national GDP. It's measured by what you can afford, what you can save, what your labor can purchase. And by that measure, the vast majority of Canadians are worse off than they were 5 years ago, and getting worse by the quarter. The real economic scorecard is business insolvency and per capita GDP. And both of those numbers are screaming that we are in a depression that's being masked by population growth and statistical games. So what do you do with this information? How do you position yourself when the productive economy is collapsing, but the government is telling you everything is fine? Here's the binary choice, and I need you to hear this clearly because this is not about making money. This is about not losing everything. Do you believe the politician who says Canada is back? Do you trust the central bank that says inflation is under control? Do you accept the narrative that we're in a soft landing? Or do you trust the data? Do you believe the businesses that are closing their doors? Do you accept that transportation and construction, the sectors that move and build the physical world, are failing at rates we haven't seen since the last crisis? If you trust the data, then you have to prepare for what the data is predicting. And what it's predicting is shortages, supply chain disruptions, a hollowed out productive economy that cannot deliver the goods and services a growing population demands, rising prices for essentials even as demand collapses because the capacity to produce has been destroyed. This is stagflation on steroids. This is what happens when you print money to mask a depression while simultaneously destroying the businesses that create real wealth. Now, I'm going to tell you something that most financial commentators won't say because it goes against the orthodoxy of modern investing. In an environment like this, you do not want to own claims on assets. You want to own assets themselves. What's the difference? A stock certificate is a claim on a company's future earnings. A bond is a claim on a government's future tax revenue. A savings account is a claim on a bank's promise to give you your money back. These are all paper, these are all promises, and promises break when the system breaks. Gold is not a claim. Silver is not a claim. Land with water rights is not a claim. These are tangible stores of value that exist outside the financial system, outside the promise of governments and banks. I'm not telling you this because I want you to get rich. I'm telling you this because I want you to step out of the line of fire. When the currency is being debased, when the government is borrowing to pay interest on previous borrowing, when businesses are failing at crisis rates, that is not an environment to be holding paper. This is about preservation. This is about making sure that when the system resets, and it will reset, you are holding something real rather than a promise that evaporates the moment confidence breaks. Let me give you one final piece of perspective because I want you to understand the scope of what's coming. In 2010, when insolvencies hit the levels we just matched, the government response was massive. Stimulus, bailouts, quantitative easing. They threw everything at the problem, and it took years to stabilize. But here's the difference between then and now. In 2010, interest rates could be cut. The government's debt load was manageable. There was room to maneuver. In 2025, rates are already elevated and can't be cut without reigniting inflation. The government's debt is already at levels that require massive portions of tax revenue just to service the interest. The Bank of Canada's balance sheet is already bloated. There is no ammunition left. The tools that worked in 2010 are not available now. So when this crisis fully materializes, when the insolvency numbers continue to climb, when the supply chain disruptions become undeniable, when the unemployment rate starts reflecting the business closures, the government will not be able to rescue you. They will try, they will announce programs, they will make promises, but the mathematics won't allow it. You are on your own. And the sooner you accept that reality, the sooner you can start making decisions based on what's true rather than what you wish were true. History favors the prepared. It rewards those who see the pattern before it completes, who act while there's still time to act, who trust the data over the narrative. The businesses that are failing right now didn't see it coming. The workers losing their jobs didn't prepare. The investors watching their portfolios evaporate believe the soft landing story. Do not be them. Do not wait for permission from an authority figure to protect yourself. Do not assume that the system will self-correct or that someone will step in to save you. The window for preparation is not closed, but it is closing. Every month that passes, more businesses fail. Every quarter that passes, more capacity is destroyed. Every year that passes, the hole gets deeper and the climb back out becomes more impossible. The recession isn't coming, friends. It's been here for 12 months. The government has been gaslighting you with population growth and manipulated statistics while the real economy, the economy of builders and truckers, of small manufacturers and independent retailers, has been systematically dismantled. You can choose to believe the press releases and the carefully managed narratives, or you can believe the businesses closing their doors at rates we haven't seen since the depths of the financial crisis. One of those things is true, the other is a lie designed to keep you calm while the foundation crumbles beneath your feet. I know which one I believe, and I know what I'm doing with that belief. The only question that matters now is, what are you going to do? Friends, thank you for being here today. Stay vigilant, stay prepared, and remember, the liquidity tide is going out, and we are about to find out who has been swimming naked.